Good morning, everybody. Happy Monday. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. And I'm excited to delve into the charts here on this Monday. We have some big action in crypto. We're seeing altcoins starting to run, Bitcoin continuing to push above that key trend line that goes back to 2017. On the stock market side, we're looking at futures that are down. This after basically the administration came out and threatened 30% tariffs, or basically said that tariffs would be 30% on Mexico and the EU on August 1st if there is no deadline. Now, the question is, will Trump enforce these? I don't know. We're going to have to watch and see. I think certainly the market is thinking he might kick the can down the road more, again, considering that as what he's done in the past. Futures are down, but not down dramatically. And I think that's the key here as we get closer to August 1st. Is this a negotiating tactic to try to push these countries to make deals? Okay, so this week, before I get into the charts, we have massive amounts of earnings. We have Goldman, JP Morgan, other big banks reporting. That'll be tomorrow before the trading day starts in the morning. We also have Taiwan Semi later this week and Netflix. Those are two major ones because they kind of set the tone for earnings for technology stocks. And then lastly, as if that's not enough, CPI tomorrow morning and PPI on Wednesday morning. So inflation data galore will be hitting the markets. Now, remember, we're coming into a period where stocks have gone parabolic. So the goal here for a lot of companies has been raised. The bar has been raised. That's going to be important. Let's take a look at the charts here. This is the S&P futures chart. So again, this is where we closed last Friday. On Friday right here, you can see we opened lower on the back of that tariff news. A whole lot of sideways downside chop. A little bit of a dip in the overnight into the 3 to 4 a.m. Eastern time period. And then just like we've seen almost every single day, folks, that we saw a rally up. And I want to show you this. Again, same thing here, right? You can see right around this early morning period, we rally up. Here's pre-market the day before. There's your pre-market starting around 3 o'clock. So what time did we start to catch a small bid in the futures? Right at 3:30 a.m. And my point of pointing this out is that you want to notice who are the buyers here. And again, this is right around when the European markets are opening, early in the day when institutions want to start floating the markets up so they can get those buy the dippers back in the market. And what I say by that is that we're looking at potential for creating that exit liquidity for bigger money. Okay, so again, just to make sure everyone understands this, let me explain this super clear. So what can happen on the institutional side is they see the markets are down and they're like, hey, listen, we can't have the greed go away yet because we still have to unload, hundreds of billions of dollars in stock before this market finally collapses. So we see the futures down in the overnight because overnight is so thin, right? Meaning that volume is so thin, they can use a very small amount of money to rally the market off of those lows and float it back up. And what that does is it gives that psychological impact where investors don't see a massive drop in the markets. They just see a slightly lower open and they say, oh man, this is great. I'm getting it a little cheaper. Markets still look okay. I'm going to push in. As they rally in and they buy into that market, you have the exit liquidity from institutions that are taking that out and dumping it on them. All right, let's get into the S&P daily chart. Here are our three trend lines that we're following. Again, multiple trend lines. Take a look at this one right here. Here's another, and here is another. And again, these are all trend lines that converge right at what I would call an X marks the spot. X marks the spot is the term I use when they come together and price rallies right into that point. Right. So again, you have this three trend line convergence and price hitting it. Now, what's interesting is on last Thursday, we briefly made a new high, but by the time we closed back below that high. And I'm very curious to see if this closing high here stands the test of time, if this high on the S&P does. Now, today we're going to open a little bit lower. We'll have to watch and see where markets go. But needless to say, to me, this is a market. While most retail will look at this and say, wow, this market's unstoppable, it's going to go up forever. I see that and I say, wait a minute, I've got to pay attention to these trend lines as major resistance in the near term. By the way, I also pay attention to the sentiment. sentiment or human psychology is a major part in successful investing. When the cacophony of bullishness gets to a fevered pitch, that's usually towards the end of the move. So again, just something to keep in mind there. As many of us out there, if you're on social media, if you're on any of the mainstream media, all you hear is bullish, 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 and that creates this kind of surround sound of bullishness out there. All right, back to a couple other charts here. Let's flip over to the U.S. dollar. The U.S. dollar creeping above this resistance line. No confirmation yet, so let's see what ends up happening here. I also am noticing you have a down-sloping trend line here. So again, I would say that, see that? And by the way, that's a beautiful trend line. It actually looks like it even goes further out, as I just messed up my one trend line. But the point being is, look at this. If we drag this out, it actually goes all the way right back to here. So look at that beautiful trend line coming down on the U.S. dollar. And that still means we have a lot of resistance here. Anywhere, again, between 97.75 and basically 98 on the U.S. dollar, this will be a significant amount of resistance. Now, if we can get through that, you open the door to a bigger rally up on the U.S. dollar, right? And that's something that I'll be watching this week. I also think that tomorrow with the CPI data, the dollar and the 10-year tend to move quite a bit on those inflation numbers because it has a direct impact on what the Federal Reserve will do, right? So again, expectations for cuts tomorrow, there may be expected to be many more cuts, maybe many less, all dependent on what the inflation data says. Now, one of the concerning things here is look at rates. Rates are continuing to push up, albeit small today. But notice we're now testing this recent high on the 10-year at 4.43%. If we get above there, it opens the door to getting back to about 4.55%. Now, these are somewhat smaller moves, but I will tell you that this stock market at its valuation levels needs the 10-year yield to stay relatively low to justify where the markets are. Otherwise, you're going to see a correction in the stock market if yields continue to go up. And again, remember, this isn't just normal times anymore. This is a U.S. government which now has a massive debt load, 37 trillion. I think 7+ trillion need to be refinanced this year alone. That's $1 trillion at minimum in interest every single year. So believe it or not, rates at 4% versus 4.5%, that's hundreds of billions in difference in interest rate payments on something like this amount of debt that the U.S. has. So, I mean, these are big numbers now, even though the 10-year is just upticking, downticking in, this 0.2% range on a dollar basis. That is epic in terms of interest payments. All right. Next up, I have a stock I'm watching here, guys. NIO. NIO is a China EV maker. It looks like it has woken up. Over the last week or so, I've brought to your attention multiple China stocks that are appearing to be breaking out. NIO is up today, trading around $4.10. If you look at the daily chart, one of my favorite type of chart setups here on smaller stocks, the V bottom at the low end of the chart. So if we look at this chart, look at this. Look at how low it is. Here's your drop, pop, and bull flag or cup and handle pattern. In addition, what's so cool about this is you got a dual breakout. What do I mean by a dual breakout? Well, here was breakout number one, right? Right here. So high pivot to high pivot to high pivot. We broke out there. And then it looks like we're getting a secondary breakout as well. If we go all the way back here, look at this. Looks like we've broken out. And by the way, to me, this looks like you have a parallel line, right? Parallel, the first line is parallel to the second line. And so really, to see a dual breakout, usually once you break above the first level, it kind of takes a lot of energy out of the move. In this case, NIO is showing resilience. Now, listen, am I going to be a buyer at $4.10 today, which is all the way up here? No, I'm not going to be. But what I do is I put this on my watch list for a retrace bull flag if price were to consolidate back to, let's say, 370 to 375, giving me a bullish pattern formation. And some of you, listen, I mean, in all fairness, me not buying at 410, maybe this goes to $5. But again, for me, it's a very strict risk assessment. The stock has run from $3.30 all the way to 410. I'm not going to be chasing it up here, even though it has broken multiple trend lines. Instead, I wait for the bullish consolidation and the pullback to look for an entry. But this one is on my watch list now. Beautiful chart setup. And just remember, I gave you guys charts like this. Look at this, guys. This is a great chart on Baidu. This is BIDU, which is the Chinese Google, essentially. Down sloping trend line. All right, here's another breakout. High pivot to high pivot to high pivot, breaks out, and now it's retracing to the scene of the crime, setting up for, in my opinion, a buy here for the next leg to the upside. So again, my point being is that US equities, especially large cap tech, are getting very, very, very expensive. However, there are other places to look. Sure, China stocks do have additional risks, no doubt about it. So we always have to factor that in. But the charts, just speaking from purely charts, the charts of the Chinese stocks look amazingly well. All right, next up, we got to look at this chart here, guys. This is a chart of Caterpillar. Now, again, this is an ascending trend line going back to 2023. It's a beauty. Notice what happened. We went right into this line and have stalled out. In addition, there's a second factor here, a gap fill trend line. X marks the spot. So again, do you guys see that? See how here, if I can zoom in on this here, see there's a close up here, and then we opened down here. So that creates a gap on the chart. When gap is filled, especially at a pivot high, that tends to be major resistance. So ultimately, what do we have here? We have an ascending trend line from 2023 connecting through every major pivot low. We broke below it in the late March, early April sell-off. We've now retraced into that line. That's called a retrace to the scene of the crime. And so it should be amazing resistance, just that line alone. It also has a major gap fill that creates an X marks the spot. And so for me, as a swing trader, I have to like that as an opportunity based on the two factors coexisting together. All right, so again, nice little opportunity, in my opinion, for a pullback on Caterpillar. Now, let's flip over to Bitcoin. We're going to also do Ethereum. So last week, we were watching this major trend line here from the 2017 bull market high to the 2021 bull market high, both first and second. It tagged it right here in 2024, pullback, and then a bigger pullback. And now we have broken above that. All right, so this is big because we got a weekly close. Remember last week I said, guys, let's watch to see if we have a weekly close because we've never had a weekly close above this line. We did get a weekly close, and we're continuing to move up. Now, that's very good. There's one small caveat. We still want to see a monthly close, but you can see here you've had monthly pierces the line, but never a close as well. But the point being is Bitcoin is doing amazingly well, and that continues to look strong. Now, listen, if at some point we come back below that line now becomes your exit strategy, meaning that if we ever close and confirm on a daily or weekly back below this line, granted, we haven't confirmed on the weekly back above it yet, but back below this line, which is right around 16,000, that would be the one thing that you would say as an investor. Now, listen, if you're a hodler, who cares? You're in it for the long term. This is gravy. But if you're a swing trader, then if any close back below 116, you have to start to think about what are you going to do here. Okay, let's go to the chart of Ethereum here. And by the way, we can even look at XRP today being a special day. Here's a beautiful move. We have a major resistance right up in this range. Now, Ethereum is trying to break above it. ETH is trying to break here, but we're right into this dual level. Former support level here at 3050 or 3050. That is resistance. Notice it hit right here on Friday, pulled back slightly. It's now trying to break. Can it break? We're going to find out. All right. That again, upsloping trend line and flat horizontal line right there. If it does get through here, you have the possibility of getting as high as 4,000 on Ethereum. But right now, again, ETH looking here, still intraday at that level. And for me, same thing. I'd like to see a daily confirmed breakout here to really signal that further upside. But just monitor today's price action. Very, very important on ETH. Can it get through this level? XRP, take a look at XRP, guys. And again, even if you're not into crypto, remember, this is still educational because it's all charting. Charting is the same. Take a look at this, guys. We have this high pivot right from this high here, and that's what we are into on XRP. And just notice here, you have a time count up. So there's a lot of resistance here around $3 on XRP. If XRP breaks through, then 337 is your next double top pivot right there. But right now, again, resistance here at $3. So far, it's respecting that level, pulling back to about 95. Amazing moves, guys. Amazing moves in the crypto markets. Keep in mind that we had talked for quite some time how the altcoins were not participating in the risk on in the stock market. Bitcoin's been participating. ETH kind of was lagging until more recently. But again, you're now seeing the jubilance that was in the stock market now spreading into the altcoin market as alts are ripping higher. All right, let's move on here. Let's get over to our, let's go to gold, because gold obviously does pertain to some interesting stuff here. Let me just refresh this chart here and bring this over here. And again, you can see I annotated the chart up for you guys as well. We can just move these up a little bit here. But suffice it to say here, what we're seeing is you're still inside of this wedge pattern. Look at how we've bounced again on gold back above. We're still holding this longer term trend line that goes back to December of 2024. So it keeps on trying to break, but so far hasn't. You could say 1, 2, 3, 4, 5, 6, maybe even 7 hits of this line. That's pretty rare that a chart can hold up for 7 hits of a trend line. Because remember, every time a trend line gets tagged by price, it weakens. That's just the nature of the door theory, which is banging, ramming into a door. The more you ram in, the more it weakens, right? So let's keep an eye on that. If we break above this 3420 level on gold, then you have a breakout. All-time highs, 3,500 would be next, eventually, potentially 4,000. And then your support level is right around 3330. That's this upsloping trend line. Notice it is upsloping, so it will slightly adjust higher each and every day. But right now, that's approximately the level right here. And then lastly, if this level breaks, you still have your secondary support currently around 3,050. Silver, you guys know I was a big bull on this for the last couple weeks. Look at this. My target just got hit today. So again, the upside has now been achieved. Not to say silver can't go higher, but you now have a level that you have to monitor as a trader that follows charts. Upsloping trend line from 2022, it's ascending, connecting through the low in 2023, then the high in 2023, the high in 2024, and even late 2024, we have now hit it. Look at that breakout, bullish pattern, and then boom, right up into that $39 level. I gave you guys 39 like literally a week ago as the upside target. It has now been tagged. Beautiful move, guys. Beautiful, beautiful move on silver. All right, next up, let's take a look at oil. Oil, again, tagging the upper end of our bear flag formation. As long as it does not confirm above this line, then the bear flag is the dominant force here, and that would give you an ultimate midterm outlook for downside, right? Short term, you can go up one day, you can come down one day, up, down, but the midterm is where the pattern would play out, let's say in the next few weeks, and that should be an eventual breakdown. I am interested in shorting oil. I haven't done it yet, but I am keeping it on my radar. Natural gas last week had a drop early and then a bounce back. It has recaptured support here at $33.37. So again, notice closed below, reversal candle to the upside, pause, and a little upside today. Has still not tagged this lower level just yet. Couple other charts. We're going to go back to stock charts real quick. I want to look at NVIDIA today. NVIDIA, again, take a look at this, guys. Great trend line here on NVIDIA, by the way, as we flip through. Let me bear with me as I put this trend line in so you can see again. This is a thing of beauty right here. And we almost got a topping tail on Friday. Today, the stock is basically trading around the flat line, but high pivot right here through high pivot, pierced right there, tags it right on that line. And look at on Friday, we pierced it and then it was rejected back underneath. We'll watch that very, very closely here to see what ultimately happens. And don't forget the SMH remains at major resistance up here as well, upsloping trend line. And again, you can see it's right into this level. So listen, this week, as quiet, listen, crypto was wild late last week into the weekend, but the stock market itself has been in a grind. That may change this week with big moves. Not only is it, I didn't even mention earlier, options expiration week. So options X has some shenanigans because of institutional money, but then you throw in CPI, PPI, as well as the earnings reports, right? All of this, plus, trade stuff, trade war threats, it does make for a week this week that could be unbelievably volatile. For me, again, I still think markets are a little overdone. S&P chart with those levels, so I'm looking for some sort of pullback. Again, we'll have to watch and see. But as always, you guys know right here at Verified Investing, we're doing no BS, just charts. The charts are the charts, right? The levels are the levels, as we say every single day. And so I will guide you guys the best I can. I do always want to thank you guys for being members or at least being followers here of Verified Investing. And I'm going to get over to my trading room now because there could be some good day trades today with members there. You guys have a great one as always. Thanks so much for coming out and watching the game plan. I'll talk to you soon. Take